Happy New Month, everyone. I'm thrilled to have you join me for another episode of my weekend series where we immerse ourselves in the world of price action based technical analysis. In today's session, we will be closely examining the XAUUSD chart, exploring potential opportunities as gold prices rallied to a new month high around the $2,070 area. Last week's setup presented some great trading opportunities as we capitalized on the bullish momentum. Despite a few setbacks with short-term sell positions midweek, we strategically continued riding the bullish trend on the last trading day of last week, securing over 1,000 pips from multiple entries as gold prices approaches its all-time high. Big congratulations to those of you who joined us on this profitable journey. Well done to you. If in any way you missed the daily commentaries on these assets and want to catch up for educational purposes, you can find the links to these commentaries right in the description box below or at the top right hand corner of your screen if you're watching on my YouTube channel. Now, gold lingers near a record high amidst global bond yields decline, inflation pressure easing, and in fact the Federal Reserve signaling a steady interest rate. All these factors seem to support the idea of a continuing upside. Now, the question as we prepare for the new week is, how will this outlook unfold in the coming week as we await key economic indicators from the United States? As always, we will be dissecting the current market structure from both technical and fundamental perspective, utilizing fundamental tools such as trend lines, key levels, and chart patterns to unveil the potential trajectory of price action in the days ahead. Before we proceed, I want to emphasize that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the XAUUSD chart, enhancing your understanding of price action analysis. Always remember, Forex trading involves inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. With the groundwork laid and with no further ado, let's delve into the details. Now, as we open the daily chart and dive into the analysis, it is evident that we are at a crucial juncture in this market. In fact, a historical perspective dating to as far back as the year 2020 reveals that we are at a robust selling area. As you will see, anytime price comes into the zone, we saw our sellers jumped in to negate all attempt by the buyers to break out of that particular zone, as you will see here. And this level for me holds paramount importance for the upcoming week, as market participants' reaction here will play a pivotal role in shaping the trajectory of price action. It's a make or break scenario that will dictate whether we continue the uptrend or brace ourselves for a potential decline. So what this simply means here is that the $2,078 zone will be serving as my key level for the week, and with a better perspective into what is going on the daily time frame, you will see how price action is gradually approaching that structure again before the end of last week's trading session. So I have two levels here, the 2030, which incited the strong move, and then the 2078 area, which will be serving as our key level for this week. Now, is price going to break out of the key level to incite an uptrend continuation? That is one scenario we are going to be looking at today. Or are we going to be seeing a situation where selling pressure will resume again just like it had always done in the past, to bring price maybe into a minimum $2,030 area, or in fact break down that structure. So to answer this question, we have a simple setup that we will be using to guide our decisions for next week right on the 4 hours time frame. But before we delve into that, I would like us to quickly run through the economic calendar so that we can keep tabs with the fundamental factors that will be driving the market sentiment for this week. And of course, we do know that by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, based on the assets we are monitoring for this week, we will be focusing on the features from the US economic docket. Now, the first impactful event for the week is coming in on Tuesday, that's December 5, and that is the ISM Services PMI, a key indicator that measures the performance and expectations of the service sector in the United States. Then on Wednesday, December 6, we have the ADP employment change, a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. Now, on Friday, December 8, we are looking at two labor data. The first one here is the average hourly earnings, which represents the average amount earned per hour by the private sector employees in the United States. Then on that same day, we are looking at the NFP data, another major impactful event that measures the total number of paid U.S. workers, excluding farm employees, government employees, and non-profit organization employees. Now, lastly, we are looking at the publication from the University of Michigan, that is the Consumer Sentiment Index, that measures the level of confidence that consumers have in the overall state of the economy, and of course tells us whether or not consumers are willing to spend money in the economy. So these are high impactful events we will be looking at for this week, and of course we do know that the anticipation of this event usually affects the market sentiment and in the long run will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I've been able to identify a simple setup we will be using to strategically position ourselves for this upcoming week. Now, what I did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of the month of November. And of course, it is quite clear that price action has been very, very bullish, hereby transitioning into what looks like an ascending channel. Now, when we connected the series of higher highs, we have the resistance line of that ascending channel, and when we connected the series of higher lows, we have the support line of the ascending channel. Now, something interesting happened during the course of last week's trading session, as we saw price action did break out of that the resistance line of the ascending channel for the first time, and in fact went us to retest the structure to incite the next uptrend move, as you will see here, which further still emphasized the presence of the buyers in this particular market. Now, our key level for the week, which we identified on the daily time frame, still remains very much intact. That is the $2,078 area, where you can see price action is gradually approaching at this point in time. Now, with the situation we have here right now, how do we intend to capitalize on the next move? Well, since we have our key level around the $2,078 area, I do want to see how market participants will react to the structure during the early hours of the new week. Are we going to be seeing a situation where selling pressure will resume around or even before that level to incite a retracement that will retest the $2,050 resistance level that was broken on Friday to incite an uptrend continuation? That is one scenario I will be looking at, and in fact that same level also shares a beautiful confluence with the resistance line of that ascending channel. Or is it going to be a situation where price will drop further into the ascending channel to incite a downtrend, maybe back into the support line of the ascending channel? So that is one scenario we will be looking at the beginning of the week. Or the other perspective that could happen here is price action transition into an uptrend continuation pattern. We could see a little bit of consolidation phase here before price action finally breaks out of the 2078 to welcome more buying opportunities in this market. So you can see now that we are at a very crucial juncture where, depending on how market participants react to this current structure, will determine what our next line of action will be. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as to how we are going to be managing our position after monitoring how participants in this market will be reacting to this structure we've identified here. If you have found this content helpful and useful in making your independent trading decision for the upcoming week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and in fact helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.